As we enter the last quarter of the year, the USD's rally has elevated the king of the FX market to 20-year highs against its counterparts. It has since then corrected lower, but the bullish tendencies seem to remain present in the US dollar. On the monetary front, we highlight the Fed's hawkishness as it was expressed in its latest interest rate decision on the 21st of September. However, worries for the Fed's actions tipping the US economy in a recession are extensive. Yet we would expect, given the strong employment and inflation reports for September, the bank to continue hiking rates at a fast pace, maybe with a slowdown near the end of quarter 4. On a fundamental level, we note the midterm elections in November for the US Congress. Should the result show a divided government, for example, Democrat in the White House and the Republican-controlled Congress, we may see Biden's expansionary fiscal plans for the US economy being curtailed. The pound ended quarter 3 low against the US dollar and the euro and remained rather stable against JPY. On the GBP pounds fundamentals, we cannot miss out on commenting about the new Prime Minister. There seems to be a wide uncertainty for Liz Truss's government. The plans for extensive tax cuts turned the market into turmoil, with UK bonds suffering. A U-turn in the UK government's plans seems to be in play here, yet Truss has to face a revolt in her own party, while being only 1 month in office. On the monetary front, things are not so rosy either. Inflation is high, as is the pressure on the BOE to accelerate the tightening of its monetary policy. We have to note that the markets expect the bank to widen the pace of its monetary policy, bringing the interest rate at 4% until the end of the year. Despite finding some support in July, JPY reached new record lows against the US dollar in the past quarter. The Japanese currency seemed to remain widely adversely affected by BOJ's monetary policy, which, in contrast to other central banks, keeps its ultra-loose monetary policy settings relatively unchanged. Overall, the bank's dovish stance is expected to be maintained, and that could continue to weigh on JPY. Given that the Japanese economy has a high amount of imports, it's understandable that the profit margins of Japanese companies may be feeling the squeeze. It's not by accident that Japan intervened in the markets to defend the yen on the 22nd of September. Yet, as long as the root of JPY's weakening remains present, we note that the market intervention operations seem only like a temporary fix. Euro has been weakening against the US dollar since the start of the year, and quarter 3 was no exception. On the monetary front, quarter 3 is marked by ECB's monetary policy tightening. However, further such tightening could tip Eurozone's economy in a deeper recession. On a more fundamental level, we highlight the energy crisis the area is experiencing. An expansionary fiscal policy is expected for the area in order to counter the problem, yet it may prove to be a costly and only a short-term fix. Also, on the fundamental side, we highlight the war in Ukraine, which has escalated further in the past few weeks and could mean additional funds of military and humanitarian aid for Ukraine. Despite some support at the start of quarter 3, they also retreated against the US dollar and ended in September at lower levels than when it had begun in July. On a monetary level, RBA's latest interest rate decision early October may have marked the slowing of its monetary policy tightening. On a fundamental level, we highlight the sensitivity that the Aussie has as a commodity currency and its positive correlation with market sentiment. At the same time, we should not neglect the close ties the Australian economy has with China. China's zero-COVID policy has been setting considerable constraints in the revival of China's economy, thus also on a possible increase of Australian exports to the Chinese mainland. The CAD, despite some initial support in July, weakened against the US dollar, with September being the month where the loonie suffered the most losses for quarter 3. On a monetary policy level, we must highlight BOC's hawkish approach regarding its monetary policy settings. Overall, given the advances made in its monetary policy tightening, we may see the bank's hawkishness easing somewhat over quarter 4. It should be noted that the easing of inflationary pressures has already started, implying that they have peaked and are now slowing down. On a fundamental level, we cannot miss out on commenting on the direction of oil prices, given that oil is one of the main export products of Canada and the value of the CAD is considered to be positively related to oil prices. Should oil prices continue to fall, we may see the loonie losing ground.